Hi, Norman Hallett here with your next 4-minute drill for traders. I'd like to talk a little bit about trader ego and some of the tricky things that your mind can do to defend your ego when you're trading, and that's not a good thing, incidentally. Ego intrusion, as I call it, happens when you mix your concept of you, the trader, with you, the person, resulting in you taking a losing situation personally rather than just part of the overall business of winning. When this happens, losing becomes a reflection of you, and you can actually see yourself as a loser. And to defend that vision of self, you do everything you can to save a losing trade. I'll give you an example. You buy an S&P E-mini contract because your indicators tell you that the market's going up. You put in your stop 10 points below the market, exactly where your trading system commands that you put the stop. So far so good. Okay, the market starts to go against you. In fact, you're now only 2 points from your stop, and because you're coming off 2 losing trades, you don't want to get stopped out because, well, 3 losses in a row, that wouldn't feel good and you'd feel like a loser. So your ego kicks in the form of that little voice on your shoulder trying to talk you into moving your stop. The voice says something like, hey, on your last trade, you got stopped out, only to see the market come right back and the trade would have been profitable. Maybe you need to look at a daily chart rather than a 60-minute chart and give this trade a little bit more breathing room. Okay, you look at the daily chart, you see a lower spot to move your stop to, and you take action. You're not going to lose on this trade. Of course, you do, and you feel like a real jerk. It would have been much better to have just taken your small loss based on your original trading plan delivered stop, but no, you let your ego take over and you took a big loss when you know you shouldn't have. Look, I'm not going to rub it in. You know what you did, and maybe now you know why you did it. If you're going to be the wise and disciplined and consistently successful trader, you have to take your ego out of the equation. The great thing about it is that when you do take your ego out of the equation, you actually see yourself welcoming small losses. Yes, welcoming small losses and feeling good about them. Why? Because small, controlled losses, those losses dictated by design, coming straight from your trading plan, are a part and a necessary part of overall winning. If you spend the time building a trading plan that fits your personality, and you employ proper risk management and money management techniques, and then test the plan to make sure that it gives you the outcome you want, and then you trade your plan, you're more than halfway to being the wise and disciplined and consistently successful trader. The other half is training your mind, feeding your subconscious mind with the thoughts and realities of a winner, a winning trader who knows that small losses are just stepping stones to big wins. Look, you're a good person. Whether you trade your wins, whether you trade wins or loses, you're a good person. Don't mix things up. When you trade, put on your trading game face and follow your tested trading plan. It really is that simple. It is. Okay, that's it for this edition of the 4-Minute Drill for Traders. Next week, I'll be back, same time, same place, and in the meantime, stay disciplined.